Hello guys and girls, welcome here in the live of YouTube. Today we are talking about Bitcoin, Ethereum from a TA technical analysis perspective, and we are going into the on-chain for Bitcoin to see where we are now in the aggregate and what comes next, and we'll see through all of this live all the important things that I'm watching right now, and I'll be sharing with you everything I know about what's in the market right now and what I'm waiting for from a macro perspective also. Taking into consideration the new values of the public debt, of the taxes, of the raising cost of capital, the FEDFUNDS, and all of that stuff. So, without taking this any further, since it's time, I'm getting into it. Let's get to it. So, let's start from Bitcoin on a TA perspective right here. You see I have a lot of indicators. I have SMA and EMAs. So let's make something more clear here. This let's take one at a time. So these are the EMAs and SMAs. The SMAs are these points right here. And the EMAs are these lines right here. So there is this yellow line that is the 12 EMA, this orange line that is the 26 EMA, this green line that is the 50 EMA, this purple line that is the 100 EMA, and the blue line right here is the 200 EMA. Instead, this is the 200 SMA. Meanwhile, the green points are the 50 SMA, and the orange points are the 26 SMA. I don't use the 12 SMA because SMAs are a little bit lagging behind. They are not taking into account the last price action as much as the exponential moving average, and so it's not really important to have that little gap of just 12 days. Or 12 candles in my opinion on a TA perspective. So this is just one indicator, and then I'll use the Bollinger Bands as another indicators. This right here are the top Bollinger Bands, this is the middle, and this is the lower Bollinger Bands. And we're going to talk about that. You see it is used as a support every time or at resistance every time we touch it, so it's very important to have a view of this indicator as well. I think it's one of the most important indicator that we should watch for. I have a technical analysis course on my on ChainLog itself on the school. If you want to take it, it's still really cheap. I'm not. You can get it with all the other courses on chain and the fundamental analysis and all of the services until I finish the on-chain analysis course. Then the course will come aside from the services that are simply me helping you out and sharing with you all my knowledge with resources, with news, with talking chat and all of that, trying to get along a group of people that really care about the market and to grow together and helping you out as much as I can. Then we have anyway the RSI bands 30, 50, 70. I don't use RSI itself as an indicator because obviously it isn't correlated with the price as much as this RSI indicator, because here you can see that, for example, this is the 70 RSI, and this is the overbought level. And you can see exactly where the price should be when it will reach this level, the 70 RSI. That is an important level, the overbought level, and that makes every time a resistance. When we are in bull market, we are most likely getting there and not to the you see right here and not getting to the lower RSI, that is this green right here, is the 30, the oversold level. And while in bear market we are most likely seeing a lot of oversold, as you see right here, every time using it as support, sometimes getting below the 30 RSI if we are very bearish on the charts. And this middle line right here is the 50 RSI. It is used as well as a resistance or a support. It depends on obviously on the price action itself, and as you see right here, every time we move higher, even in a bear market relief rally, there is this line right here helping us support the price. And you know, I like to have all of this mixed together to have a clear view of what's going on the price action lately, and to make some comparison between here in the bear market, the last price action, watching the price action about the candles and everything else. So once we got this, I want to talk about the price action now, as you see right here. And let me just see if there is something that you want to know. Okay, as you see right here, we are at a very low level on the technical analysis. We are actually retesting support that we'll see on the monthly chart a little bit later. And this kind of movement we had 2 days ago, it was a liquidation event, a short squeeze that led us to this point. And we'll see on on-chain that there is a resistance, a really important resistance right here, that is the realized price that is holding us down and is putting us a resistance in this moment. Still, in my opinion, and just in my opinion, all you see right here is not financial advice, it's educational purpose only content, and I'm trying to share with you just to make you know what I know and to help you out if possible. And so we'll see that together. In this kind of movement, I don't see really much price action, bullish price action right now. I'm just seeing this huge movement was also caused by the ETH BTC chart right here, when we had this amount of overbought level on Ethereum in comparison to Bitcoin, and a lot of Ethereum were sold into Bitcoin to have more Bitcoin, obviously. And that is kind of significant in my opinion. We can see that there is still a certain amount of demand for Bitcoin, and not only on Ethereum, even with the narrative itself about the merge that is going to happen in a matter of days. The real merge, the Bellatrix hard fork on the mainnet went really good, so we are still waiting for that. It seems that all runs good, so Ethereum will go a proof of stake in a matter of days, and that's exciting to say the least. We were waiting years for this to happen, and we are now here. And anyway, there is a lot of demand of Bitcoin also, even with all the legislation that is going on in the countries, and in my opinion this is good. About the legislation, if I remember in the next maybe later we will talk about that. Now let's focus on the TA. As you see, we retested again as a support the 50 EMA and as a support, and we are in a kind of zone where we can go much higher, since the upper Bollinger Bands and the 50 SMA are actually contributing to put us a resistance right here, and we are in the top of this kind of price action. So if we want to go higher, we should wait for these Bollinger Bands to narrow, because when the Bollinger Bands narrow, it signifies that we are going to see a lot of volatility in the coming days, since we are watching the daily chart. On the 4-hour chart, we were in fact doing this exact thing. Let's take out the RSI and all the MAs, as you see right here. We were narrowing and narrowing and narrowing until at a certain point we got a flash out and then a flash up, and this is most likely what every time happens with the Bollinger Bands. And every time we reach a point where we are actually at the top of the Bollinger Bands and the price can go much higher. For this to go up much higher, we need a lot of demand, a lot of movement, maybe on derivative sides, on everything else. So it's not the case right now, in my opinion. We are just experiencing a liquidation event, so we're not experiencing a liquidation event again on the another short squeeze. We are going probably a little bit down, retesting maybe the level of the 20.8, 20.5. There is a lot of resistance in this zone. As you see right here, the middle Bollinger Bands at 20.3, the 12 EMA at 20.5, the 26 SMA at 20.6, and the 50 RSI and the 25 EMA at 20.8, 20.9. And there is a lot of support here in the zone, so we'll probably see a little bit of a retest in the next few days if Ethereum and the CPI will not lead us higher, because we'll have to see the next values for the CPI and for the Ethereum itself merge, how it comes and comes out, and we'll see, because if Ethereum itself that is actually in a zone of the upper Bollinger Bands on the daily chart, still really moved up higher, and even lately, if the merge will be successful, there are some kind of narratives now that, and some kind of outputs that will that we could have, that will be probably 2 or 3 scenarios. One of the most that we have seen now is that Ethereum will be sold into Bitcoin. Meanwhile, the price go higher to get more Bitcoin. So we have this buy the rumor, sell the news event, and in that case, we could experience something like that. Not all of itself. I think a little bit will be that. A little bit will be more people getting into Ethereum meanwhile the merge approaches, and another and more, there are actually some kind of people just speculating on the price. So there will be a lot of volatility on that day. I don't advise anyone, even if I don't make a financial advice, to trade in that area in that day. Just make the things go, and let's see what happens before making moves. For Ethereum itself, so I think a little bit of a retracement before getting a little bit higher on the day of the merge, and then a little bit drawdown for the sell event, because when you are in a bear market and in an asset that you own goes up, you take a little bit of profit, obviously, if you actually bought on a low level, right? That and the fact that more people are getting into Ethereum for the long term, if anything goes good, because the proof of stake actually is good for the net worth investor to invest in, because obviously they can use their stake to accumulate more stake and get more rich. That's most likely what it is, and how it's used actually. That will be good. And we'll see in that matter. But let's focus on the weekly chart now for Bitcoin, and we'll see how and where we are now. So let's get here. As you see right here, we are at a level where we had a kind of doji. It's not really a doji, but it's in an indecision candle, and we are actually trying to close the week above the 20k. We used it to open up. We opened up above the 20k. That is the last all-time high for the last bull cycle, and we are still getting higher and trying to retest the 12 EMA on the weekly chart at 22.8 and the 200 SMA at 23.2. So that is some kind of resistance that we can expect in the next few days or weeks to be put in. It all depends, as I already said, on the fact that the next CPI, even if the CPI will be lower than it is right now, if it's not really low and it's not getting down really much, probably the Fed will just keep growing and keep getting in 75 bps that is expected. Just make you see, it is, the market is just pricing in 91% at 75 bps for the next rate hikes on 21 September 2022 for the FOMC meeting. And this will kind of lead, or is trying to be priced in anyway, in all the assets, not only on Bitcoin. And you know, when the dollar is getting stronger because the cost of capital is raising and people is fleeing from risk on asset to risk of assets, then the dollar denominated assets suffers against the dollars, obviously. And this is kind of the things that we're talking about also in the next few moments, probably next few minutes. But before, let's finish here. This is not really bearish in my opinion, because as you see right here, we have a lot of demand in this area that I outlined on the 14th of June. This is we can see it better with a monthly candle. This is the area where it opens up and closed, opens up the real last candle and closed the last all-time high monthly candles on the last bull cycle. And here, right here, we have the 20K, that is the top of this candle, but it is also where we stopped back in November 2020 before getting higher. So you see, it's still 4 months right here in the monthly chart that we are most likely above 20K, getting a little bit of a dip, grabbing some liquidity below it, just to getting higher. And so this kind of seems like an accumulation phase. You see right here, we didn't have that much of a movement staying right here in the same zone. We most likely got up, then down, down, up, down, and we are still right here now since 3 months. And we'll see if this month will be the last one. We will be right here. Probably a little bit of another dip in the next few months will be likely if the Fed keeps raising interest rates, and that's what I'm pricing in right now. They are going to getting higher on the interest rates because they need the inflation to go down. Because if inflation keeps soaring, we are not going anywhere, and everything will collapse. We need to take, and the Fed needs to take inflation down and under control, because that's how the system works. If inflation goes out of control, you have hyperinflation, and people will start getting into the streets because they can't afford even the living, the food, and all their needs can be fulfilled with their money. And actually, this is most likely something neutral for me, because it's not bullish. We are not getting higher. We are not getting a higher high or any movement. We are still inside this candle right here. We're not moving anyway, and there is a lot of illiquidity in the market, and there isn't really much speculation. There is nothing moving on. More or less, we are still more or less there in the same zone. As you see right here in the monthly, we retested last month the 50 EMA, you see right here, and we got down, and we are still in here just retesting the 50 SMA. We got to the point where we touched the lower Bollinger Bands, and now we're just waiting. One thing that I noticed is that we have the 100 monthly EMA right here. It's at 14.6, and that is more or less the same zone, 13.7, 14K. That is my very bottom in the very last worst case scenario for Bitcoin. I'm not thinking we are getting there now with all that's happening. If the things worsen more and more, probably, but I don't really think so with all that happens right now. Probably this is the one of the, I think, and still think that this huge demand area will actually support the price in the next coming month. And this is most likely it for Bitcoin itself. As you see, anyway, if we're taking the dominance, I have this kind of behavioral pattern. Let's take out this a little bit so we don't have a lot of noise. As you see, I have this behavioral pattern right here, this cyclical pattern that the price is in actually. You see that we got down, then we got up, then we got down, then we got up in a matter of the same amount of days every time. This is some kind of a cyclical analysis that I started to understood, and we got to the point where we are in the upper zone and we are actually getting higher. This could signify that in a matter of days we could see a little bit of an higher move to the upside for the Bitcoin dominance, and I'm waiting that momentum, that moment to enter the altcoin market, because right here, if the dominance is getting up like this, sucking away the Ethereum dominance and the altcoin dominance, as you see right here, that means that the altcoins will suffer in comparison to Bitcoin, and it's better staying into Bitcoin right now, waiting for a good opportunity and the next alt season to get more altcoins, and so to get more Bitcoins in the next trades. That's most likely what the good market participants do. They accumulate Bitcoins, they use it to pass it on Ethereum and then to altcoins and then back into Bitcoin itself to get more Bitcoin, and so on and so on and so on forth. They keep doing this cyclical behavior, and you'll see on the market if you are a good watcher. And that's what I do also, because this is the way you can make money without using your fiat account if you don't want to, and still be in the market. The fact that we're still from a crypto dominance perspective, this is the crypto dominance, it's auto-developed. I developed myself this indicator. It's all Bitcoin, altcoins, and Ethereum all together, all their dominance together, and in comparison to the market cap. So this is the actual crypto dominance in comparison to the market cap is 74.36% today, and it's still lower because I did a video about that on my channel. You can get to it to have more information. But this bear market is different from the last one, where in the bear market there was a lot of accumulating in altcoins and anyway on Bitcoin and Ethereum. Now we're seeing a lot of falling out and waiting and to get into risk-off assets instead of risk-on assets, because this is a real good and real rare crosses we have in the market right now. There's a lot of ongoing Onchain ASOL in the market that is just in a bubble, and the banks can't actually repay the debt. There is there are protests in all over the globe for hyperinflation, for raising cost of living, and the poor countries are actually the ones who are actually we are currently in the process of getting into the street to demonstrate how much this weighs on them. And if these things continue, and this kind of hyperinflation and all of this problem will reach Europe and the Western countries, we could see a very spread of this grievance among the people, and we need not more than 3.5%. It's more or less a rule, but it's not very much yet. 3.5% of the people of the world protesting against something to make a change real and possible, and something is like a critical mass, if you'd like to say it. And we don't want to get there, because that kind of starts some kind of revolution that will lead to obviously revolution is change, and change brings suffers and brings something unexpected into our lives that we don't want to. Maybe violence, maybe a change of government, something really huge that we don't want to see for our market prices, obviously, but also for the safe of our fellow citizens and our families. But anyway, it's out of our control if the Fed doesn't do nothing, if the ECB doesn't do nothing. ECB is actually raising interest rate, and we are talking now, before getting into on-chain for Bitcoin, about the fact that the ECB has raised interest rate by 75 BPS, and this led the euro to repeg, more or less. It got to $1 1 euro on the euro USD dollar chart, and that led the XY to get a little bit down and got a little bit of a breather to the dollar denominated assets. But if this continue, we have we have a spread. If I can find it, let me just get there. Housing, retail, so this is the spread, BTP BUND. They are actually two kind of bonds, okay, on the market, on the European market. The BUND are the Dutch bonds, the safer bonds, and the BTP are the Italian bonds, the riskier bonds. So if the spread is too high, that kind of bring problems into the market, because obviously when you have a complex system like the Eurozone itself, having different countries that are in a safer place financially, and something like Italy that is breaking down, you cannot raise interest rates really much without making so some of these countries break. They can, Italy for example, can afford to pay their debt if the ECB start to raise interest rates like they did last time. So what they did put in place an instrument, the TPI, the transmission protocol instrument, this transmission protection instrument that actually is let's call it an instrument to make so they can buy the weaker bonds, and making so the country is not failing to repay their debt, using the safer yield of the safer assets, of the safer bonds. But this is not really all of that. They can also, for example, if they want, there is written that they can actually buy those bonds, but there isn't just by their own will. So they will choose if they buy or not those bonds. And how can they buy bonds if not printing money, if they don't have that much of dollars or euros in this case to buy these assets? They have to print, and printing money will reduce, obviously, and will enlarge the supply and will reduce their purchasing power. And reducing the purchasing power, and so reducing the ability of the euro to buy in comparison to the dollar, will weaken the euro and will strengthen the dollar, and will move the risk on assets, or anyway the stock market assets and Bitcoin and every crypto assets denominated in dollar down. That is how it works, and so we'll see how it goes. But we are not in the next few months, in my opinion, in the position where we are going to experience a bull market or a bull rally. The only thing that I'm waiting for right now is the end of the winter, because in winter we have a lot of demand, a lot of volatility at the end of the year for the close of the balance sheets. We have demand also, not only for the necessary goods, but or commodities, or but also for the luxury goods. For example, for the 25th of December goods that we and all the festivity that we have. So we should watch for this winter, especially in Europe, because the raising cost of the material itself is going higher. And you see, this is, for example, the Dutch TTF gas-based load future. This is the price of the gas from the Dutch side. This is an ETF, more or less, and it is very high. It's ramping, and if it keeps going like this, even if it drops down, it dropped down a little bit in the last few days, isn't going to be good for the Dutch and for European themselves this winter. We'll have to pass through this winter, and we'll see if we'll have this amount of problems to be solved. But I think the very thing that I'm watching for is the Fed. The Fed, if it's raising interest rate or not, and we'll have to see, because the Fed funds are actually increasing really higher, and keep increasing. It is the first time, probably, if they keep raising interest rate, that we are going to get an higher high on this chart since the 40 years. It's a 40-year high. It's the first time we have a higher high on this chart, and this could lead, and we'll see next, in a very risky place for the markets and for the countries themselves. We are going to get there in a little bit of a moment, but let's get into Bitcoin on chain first, so that we don't lose our momentum, and we don't lose the Bitcoin focus we have. As you see right here, we have the adjusted SOPR. The adjusted SOPR metric is the spent out to profit ratio of the movement on chain. That means that the amount of movement that comes on chain in the aggregate are getting into this chart and demonstrate as they are in a loss or in a profit. If the market is in the aggregate above 1 on this metric, in the aggregate the market is in profit. If it is below 1, it is in a loss. It's moving coin in a loss, and the 1 itself is a break-even point for the market. I'm watching this chart, and it is adjusted. Obviously is the fact that you can adjust a metric for the circulating supply, because obviously if you don't adjust it for the circulating supply, and we'll see in another metric, you can have different values. But in this case, adjusted means just that we are taking out the 1 hour transactions that are making the noise into this chart. There are a lot of transactions less than 1 hour old that are making noise, that aren't very useful to us, because we need to see the most old transaction, because they are meaningful. The more old they are, the more meaning they have, because if you watch the long-term holders' behavior, you can guess more where the market is going with this huge cohort that is the most meaningful. And right now we are retesting the 1, and we are still below 1. I did a video on this as well on the last. I did a let's say a thread on this on Twitter, and I made so to see it. I made so you see the fact that the periods where we are below 1 and we are selling at a loss in the aggregate, we are in a bear market. Meanwhile, when we start to get into a position where we are starting to grow and the price is getting up and we are starting to get into a bull cycle, we are most likely getting the 1 as above the 1. So we are using the 1 as a support, not as a resistance. And in the last time, we are using the 1, as you see right here, most likely as a resistance. We are in this bear market price action right here, and it's not changing anytime soon. Still, we are getting to the 1 every time, and every time we get rejecting and got down below, every time and every time and every time again, until I see something like a retest of the 1, and then we got higher, and then a retest of the 1 as a support and getting higher and staying above the 1. I'm not seeing that much of a bull price action, in my opinion, even on chain. So but let's get into short-term holder realized price right now. This is the short-term holders, the less than 5-month holders of coins, and this is really important, and I think it will be our huge resistance in the case of a bear market rally, and it stays actually at 24.42, and let me see if you can watch it. Yeah, okay, is 24.4. Let me see if there is any. Okay, this could be a huge resistance. You'll say why you think it will be a resistance. As you see right here, every time we used it as a resistance in a bear market, and we use it as a support in a bull market. And the last time we got to that point, as you see right here, every time, and the last time we got to that point, we got rejected down and we got very far below. So we're still there waiting for this retest, and we'll see if this time we can break out. But with the next few things that are coming to the market, this rate hikes, I don't think we are getting there real soon, or at least that will be our resistance. The long-term holder realized price instead is it's been our support since the last drawdown, the really last drawdown, and we are now getting through for the first time in weeks, and we'll see if this will be just a retest of this line, if a little bit of above as a resistance, or we can manage to use it as a support to push higher. But I don't think so, and we'll see in a moment why. Long-term holders are those that held Bitcoin for more than 5 months, okay, and they are meaningful. Their transactions are meaningful, and we watch the realized price for that. Getting into the realized profit distribution, as you see right here, next few days we had last day actually we had 272 million take profit from the core 1 day to 1 week. So the short-term, really short-term holder, the speculator remaining in the market, are actually taking advantage of this short squeeze to get more profit, and they're putting in a resistance right here. Let me get to the chart. We are getting to a resistance in this area right here, and as you see, the price itself is actually standing there because they are actually taking profit. And you know, we can see this on chain, and we can guess if the price is going to get down or if the price is going to get up, and still, in my opinion, is not bullish in any of these charts. So if you take profit like this, and these profits are actually coming, as you see right here, they are coming most likely from the whales, and very low from sharks, but also from the other cohorts. That means that in this movement up, we are not seeing a huge conviction, and we are still getting as much as a profit as we can in a bear market every time the price goes up. So we are not seeing that kind of market price action, this behavior from these holders. But still, there are a lot of long-term holders that didn't move. So even if actually the short-term holders are driving the price, the long-term holders are accumulating. and they are always accumulating. Because they are long-term holders, they believe in the assets. They are not taking any. In fact, as you see right here, they are not taking really much of a profit. The only one was a whale right here, 8-year plus whale that was taking profit. Actually, it took 300 million profit from an 8-year Bitcoin transaction, and you know. I think they deserve to take some money out right now anyway. They could have done on the top, but if they needed, as you see, the majority in the last, since the last drawdown, was just short-term holders moving the market, and short-term holders are this red orange colors right here. The more cold colors are actually long-term holders. So we saw the realized profit, but we didn't see the realized loss. There is a lot of realized loss, but in the last few days, obviously, when the market goes down, there is a lot of realized loss. When the market goes up, there is a realized profit if the market participants are not getting, or they're not thinking it's going to get higher. And but in the aggregate, the realized loss is still really huge. And last drawdown, I saw this peak right here, and 14th of June was the time when I spotted it, and I said, we are going to bottom right here, because there were a lot of indicators, and you can get back to that date moving along with my Twitter analysis. I have the link for all the past analysis where I talked about that, and there is also the video on YouTube itself for that specific date that I made for ChainLog before 1 week later getting into YouTube on the public, because obviously ChainLoggers are, or those who use ChainLog service are first, because they pay for it. And anyway, since we don't have a lot of realized loss, and we have a more realized profit, and this realized loss, even if they come in the majority, as you see right here, even here, the majority comes from short-term holders. They are also coming from whales and unbacks, so a little bit of a shark here in this drawdown, because it was protocols, it was there was a Luna Foundation, there was a lot of bankruptcy from Celsius and everything else, so there was a lot of things that were going on in the market, still are going on. So they are driving the price right now. There isn't really much of price action movement from plankton, shrimps, crabs, or fish that are these cohorts that are less than 100 Bitcoin. The majority are above that, and they are moving the market right now, and they are short-term holders. So I don't see, in the long term, I'm still bullish, but in the short term, I don't see the case for a bull run to start, actually. I was talking about the resistance right there, the realized price, and this this purple line right here is our realized price. The realized price is actually the price, the cost basis in the aggregate of all the market participants on chain. So that means that all the transactions that moves on chain are priced in at the price they last moved, and in the aggregate they take a mean about on all of that we take a mean, and this is the realized price of the asset. So the real value of the asset on chain for the market participants, and that is kind of huge, because knowing that, knowing how the market participants are pricing the asset is a huge way to see where the price could go and where it can be at support or not. In fact, let's get all the chart right here in just a moment. If we get only the realized price, as you see, there is zones where we are taking the realized price as a support, and this is more likely the start of a bull market, and the moments where we are below the realized price, and in that case we are in the very bottom of a bear market, very bottom every time, and this time it will make no difference. We are getting below and a little bit up and get below, so we are still ranging right there in the same area, below, up, above, below the realized price. It's a good area to buy in my opinion, still not financial advice, but we are using this as a resistance this time, or we'll use it as a support and we'll bring higher. I don't think we'll go much higher, but still, this is a new support resistance zone that we should watch and care for. Another fact, taking out the realized price, are the 200 weekly EMA and SMA. The weekly EMA, the exponential moving average, are this red line. Meanwhile, this orange line is the SMA. So the SMA and the EMA, how they relate to the price. As you see, every time we got to the 200 SMA on the weekly chart, we got the price, we got the support of the price, and we got higher. This was the very bottom of the every bear market since, and we are now below that. We didn't got so far below the 200 SMA ever since, and that's kind of the best opportunities I can see to buy Bitcoin in the long term. And if we can manage to get above it and bring it higher and higher to above the 200 weekly EMA, that will be huge. Now it's just sitting that at 26.5k. Meanwhile, the SMA is 23.2k. But if we can manage to get above there and use it as a support, that will be, watching confluence from other indicators, a good starting point to see if a bull market is starting. It's not the case right now. Still, we are using the realized price as a resistance, more or less, with all that we've seen so far. So we'll have to see in the next values of the CPI, the merge, how it goes, the next FOMC meeting, if the market, probably without more or less without any doubt, we'll have 75 BPS. So this is what I'm seeing right now. I'm not really bullish short term, I'm bullish long term for Bitcoin. And I took out the SOPR metric. This is not the aSOPR, is not adjusted by the 1 hour chart, by the 1 hour transaction, and is taking into account all the transaction with the noise and all of that. As you see, when we got to the point right here in the last movement up to 24k, the last bear market rally we had, we got to the point of 1 and we got rejected, the 1 and we got rejected. It works in the same as the aSOPR, where the 1 is a break-even point and above is a profit zone in the aggregate for the market, or we are moving coin at a loss below the 1. But just with the 1 hour transaction that makes the noise. You can actually work out that here on the right yourself. And I don't see it getting above the 1 really much, and in this case we're using the 1 just to get below. Every time we got above that, and we can use it as support for a long period of time, and we, after obviously getting down into a bear market, we are going to expect a little bit of a price appreciation, as you see right here. Then if you watch that was the COVID crash, so it's really doesn't matter really much, because we got below but we got up again real soon. So the use of the SOPR remains intact, and I don't see right now this getting higher. I don't see it, so I can't say oh, I'm bullish on Bitcoin in the short term. No, I'm not. I'm bearish on the short term, but that's good because we can accumulate more, or at least I have to, and I will. This is the average spent coin, the average spent output lifespan for Bitcoin. This is just actually taking into account transactions and not UTXOs, and not the weighted volume of the coins. So if you move 100 times not really that. If there are 100 transactions with 0.1 Bitcoin, they count as 100. Meanwhile, taking into account meanwhile they're not taking into account if there are 100 transactions with 0.1, 100 Bitcoin, 1,000 Bitcoin, all in that one and the other. If they are mixed, they don't count. They are still 100 transactions moving. Okay, so this counts the transaction themselves and not the amount of coin moved, and the lifespan of this transaction. So you move 0.1 one day, or you move 100, doesn't matter, but it matters how much time this bill is. Like I give you a bill of $5 or $100, it doesn't count, it's just one bill, and you take and you held it for like 1 year, then you spend it. 365 days will be put into this chart, without taking into account how much if was 100 bill, $5 bill, $1 bill. And so we see right here that we are still very low, and when in this chart we are very low and we don't have the spike. This was just a fear we had from the possibility of the exchange that wasn't actually capable of getting us our money. So this doesn't really matter. If we have a lot of this kind of values for a long time, this is important and to see, because it means that there are a lot of old transactions being spent out into the market. So the reason in that case there will be no interest in that case in the asset. There is something goes wrong, and we should watch for that. But we are in a low level area ever since we started getting down below. As you see, we got this huge spike every time, this huge spike when we got to the all-time high with all of that. Meanwhile, these low values right here that we have, and we have this kind of moving higher just because, as I already saw, there was that whale 8 year plus that moved that coins 100 million at a time every time, and so this got a spike up. But in the aggregate we are at very low values, and this is confirmed. So there is actually the strength of the short-term holders, their belief in the asset, and they want to get more and just hodl through all of this, even if they are in profit or in loss. That doesn't matter. And this is confirmed by the dormancy supply adjusted. This is obviously supply adjusted because right here we have the amount of, you should have should know what is coin days destroyed. Coin days destroyed are actually those days that I talked about, the amount of time you held something and you spend it. That amount is getting into this chart. So this is supply adjusted because at the very end, at the very beginning of Bitcoin, we had low amount of circulating supply, so that there can be an exact same amount of days destroyed, because if you have 100 million coins and you have 20 million coins in one day, in the first, if you have 1 million coins, you had 1 million day. Meanwhile, now if you have like 20 million coins, you are actually 19-20 million days every day. So it's supply adjusted for that, for the circulating supply. Meanwhile, it was minted. This is dormancy, and dormancy takes into account the weight of the coins. So if you move 100 bitcoins and 110 bitcoins, 1 bitcoin, it takes into account that the difference and put into this chart, weighted for that. So we analysts use this as a weighted volume metric to see how much of Bitcoin are moved, also with the amount of time being held. And as you see right here, every time we get up into a bull market and we reach a point where we are at an extreme oversold level, and long-term holders are starting to get profit and starting to get in profit out, this is actually getting into increase and spikes up until the point it drops down and we got into a bear market again. And this happens every time we get oversold levels. This kind of movement up was like a dead cat bounce, and there wasn't really much happening on long-term holder side. It was just put in place a resistance, and we're still waiting here. As you see that the values are diminishing, so we're not seeing that much of long-term holders selling into getting out. They are still retaining their confidence on this asset. This is also confirmed by the Coinbase destroyed itself metric, and as you see right here, we are even dropping more below than the last time. This is not supply adjusted, so you can see that there is some difference in the last cycles because of the difference in circulating supply there was. And as you see, we are even getting below, and we are still here moving really less and less coins every time. That means that we are just seeing short-term holders and not long-term holders moving coin into the market. Another confirmation, another confluence metric, and I use confluence for all just to see how much and where we are. And this is sell bubbles. Here we can see that in the last 30 days where we are actually selling, where the selling are happening, and from where there was purchasing. So the majority of purchase has been done that are selling today and in the last few days are from this last movement here, from the last drawdown. So there is a short-term holder behavior of selling coins every time we get a spike up, and this confirms along all that we already talked about. There is a little bit here of selling from the last all-time high. You imagine getting Bitcoin into the all-time high and selling right here. It is just devastating. I don't advise anyone. You're just better off just holding down for 2 years from now, and you will see that something will change for sure. It's not financial advice, but it's just my opinion, and I believe in it because I just lived through the last bear market and I know what I'm talking about. In my opinion, if you have another opinion, it's okay. I would like to know it anyway. If you want to, down in the comment on everywhere, on Twitter, everywhere you want. So this is another confirmation of the fact of short-term holders are in the control of the market and they're moving their coins and not long-term holders. This is MVRV Crosses. This is a metric that I'm watching to see if we are at a very bottom. If you see right here, this is this blue is long-term holder MVRV. This is short-term holders. The red is the short-term holders MVRV on a 7D EMA. So long-term holder MVRV, what it is, you can see it yourself right here, is just the difference between the market cap and the realized cap, essentially, so that you know the profitability that you have, and how much of profitability you have in these cohorts. So every time we got the MVRV, the market value to realized value of the long-term holder below the short-term holder, so the profitability of the long-term holders got below that of the short-term holders. We were in the exact final bottom on the last piece of every bear market ever since, and I'm waiting for that to get this green space right here, to see if we are in fact in the last phase of the bull market, and we are starting to get up every time. As you see right here, we're starting to get up. You see right here, we got starting to get up. As you see right here, we are starting to get up. So I'm still waiting for that. I'm watching it very closely because it is one of the last metric I'm seeing that is not capitulated yet, and still is anyway really close one another. And I would like to see it to have another confluence metric to add to my thesis. Last, we are watching the balance, the address balance from the cohorts. As you see, the AMBEX are keep on increasing since the last ultimate. They keep on increasing every time, ever so slightly. Their holdings into Bitcoin, and you see right here, AMBEX are 10k or more Bitcoins holders, so very few, few hundred, and people or institution or anything else that is they're increasing their holdings. Meanwhile, whales are actually decreasing. Why, you guess, 1k to 10k holders or whales are actually decreasing? They're actually decreasing because they are not more whales, they are becoming AMBEX. You see the same pattern. Meanwhile, the whales decrease, the AMBEX increase. They are accumulating, they are becoming AMBEX, and this chart is showing us that the AMBEX are increasing in comparison to the whales. Okay. Meanwhile, sharks are, since the last drawdown, trying to get a little bit more into their account. Not really much far higher, but still a little bit of accumulation is on the way right now. And fish, they are accumulating since the last drawdown very much, very aggressively, and they think we are very much at a bottom in the bear market, probably because they are accumulating aggressively, and every time we got below the 20k, they are still aggressively ramping in their holdings, and also if we get above. So this is an area where they actually love to buy, and that's huge in my opinion. It's also huge that the crabs, that the shrimps, that the plankton, as you see right here, are actually accumulating without any sense. Plankton, they are actually accumulating with no regards to the price. Shrimps also, and crabs are actually accumulating as well, with a little bit of retaining themselves when we are at the very top. They're actually retaining their holdings, but they're keeping accumulating ever since we got down from all-time high. And that is going to fit in my long-term bullish case, where we're going to see sell pressure diminishing, a change in the macro environment, where we don't have that much of sell every time we get up, and this buy pressure, this accumulating, will finally lead us to the next bull cycle. This is what I do. This is what I saw last cycle, and this is what happened every time since Bitcoin was put into a market, and we were going to buy it and sell it and trading it. So now that we have watched all of that, the only things remaining is to see how much of a debt and the situation of the America, of the USA is. Okay, so we're starting from the federal debt, total public debt, and as you see right here, this is denominated in millions. As you see right here, let's get out all this noise that we don't need it. We don't need it. And as you see right here, the total public debt is increasing at the fastest rate ever, and since we could say that in 2008 the public debt raised more or less quickly, but as you see, this is just another kind of slope, and it's still increasing, even if in the last few months has been decreasing in momentum, but it's still at an all-time high, and it's going to get worse obviously in time I don't see any way a way out of this debt. I don't see the USA being able to face this debt and to bring it down. It never happened, so at this point it will never happen again. And this is obviously bearish in the long term for the American economy, for the US. But it's not only that, is that, for example, you see this is the total public debt in comparison as a percentage of the gross domestic product, and we have 122% of public debt I don't know if you can grasp the problem right here. The GDP is actually the all over production of the all Americans without taking into account the expenses. It's just the production, the real value of all the goods moving every time, and the same good is moving every time it's making a GDP number getting higher. Okay, so we have 122%. Even if we got a little bit lower, we got the point of 136% back in April, and we are getting down, but we are still at an unprecedented amount of public debt in comparison to the GDP, and this is just bad. It is just unbelievably bad. The Fed, the government, they have to find a way to keep running the country even with an higher amount of debt if they are continuing to get into this cycle. As you see right here, every time they got a little bit far below, and then we got up higher, and then we got a little bit below, but still get up higher. And if they keep doing that, I don't know how much the system will keep up before collapsing. Actually, this is just long-term bearish. I don't have, and we have this. That is the cost of capital, yearly debt cost in denominated in billions. This is actually the debt in billions. We've multiplied for the Fed funds. So we now every year the US every year the government has to pay $712 billion just to not default on its debt, just to have their debt. So you have your debt, and you have to pay. It's like going to buy something, but before you can buy something, you have to get a tax. It's like, unbelievable. You go to the grocery store, it's like $20, and then you can buy. It's unbelievable. $720 billion every year just to have your debt. It is increasing. It's ever increasing every time we got higher. The yearly cost of capital is increasing, and this will lead a lot of industry, a lot of companies into problems if this will continue going there, and the stock market itself, because they are going to sell their assets to cover their debts, to cover all their expenses, and also the average American will pay for that. As the cost of capital will increase, because it will be passed obviously on the average citizens. Average citizen is just like that every time. And the first time in 40 years also, we have a yearly cost of capital as a percentage of the GDP itself that is getting higher. I know you can grasp in this moment, you can grasp the importance of this, but moving up higher, the yearly cost of capital as a percentage of the GDP, it means that the country isn't actually able to produce more than and to face the actually raising cost of capital. And in these 40 years, the US was been able to do that. But now we are seeing the US struggling onto producing the goods they need, and the amount of money they need to repay this yearly cost of capital. If they don't repay their debt, and they can keep up with the yearly cost of capital, they are going to, guess what? They are going to not be repaid, so they are going to default. And that will be the case, obviously, in the short term. I'm not saying that. I'm saying that this is a very, very bad situation, and is no joke for those who have to tackle on this challenge, because they'll have to do something, and in doing that, they'll have to be extremely careful on what they're doing, because a little bit of a move somewhere where you shouldn't touch and something will break. That's the Fed. That's the problem the Fed also is tackling. They're trying to get down inflation, raising cost of capital, but they'll have to watch carefully for the early cost of capital with their with raising their hikes. Even if I think they will keep raising it until the labor market will crash and we'll see a lot of problems in the labor market. But still, we're not seeing that as of right now. The labor market is still something strong. They're watching the unemployment rate still at 3.7%. It's an historical low level, so they think the market is strong and it can support these rate hikes, but they have to be extremely careful, as we already said. And this instead is the yearly cost of capital as a percentage of the taxes. 24% of the US taxes are going into repay the debt. That means that even if they raise taxes every year and every year and every year, they are still getting 1/4 of what you give them just to repay a debt and not to make any services. They doesn't give you any services. They just use it and give it to the Fed to repay the debt. And then we have to increase taxes. Every time the cost of capital raises, they have to increase taxes to get at a level where they can actually afford to repay this. And if they can, they will remove services. They will remove things until they can repay, because this is just actually how it goes. That will be rough. Here, another thing, we have a little bit of a slowdown in the total liabilities. Total liabilities include credit card loans and everything else. So for the average consumer, loans as well is not the public debt or something like that. It's just the average consumer liabilities for example, the industry's liabilities, the companies, and all of that. It's a little bit of a decreasing. They're trying to get on it, but still it's an historic high, and it keeps increasing every time. And as you see right here, there is a no stop to it. This is really bad. And the same goes for the yearly cost of liabilities, overall debt to be repaid. It's an historical high, and the yearly cost of liabilities is just the amount of in millions. So we have 204,000 millions, more or less 204 billions every year to be repaid on their debt, just to have these debts. And this is a huge amount of debt to be repaid every year for the liabilities of the average consumer, of the companies. And this will, in the long run, if they don't get this lower, if they can manage to lower their debt on the yearly cost of their liabilities, they will have to fire people. They will have to cut their earnings, cut something, because they can't afford to have this higher amount of debt with the raising cost of capital. They just can't. They'll go in default. And another things that I saw is that consumer loans, credit cards, and other revolving plans in all commercial banks is getting higher. It's getting higher since the last year. And because the people can't afford actually to buy even the necessities, and they're actually taking loans just to buy food and drinks and keep on living. And this is a pattern that isn't stopping either. It's up and to the right. I don't know how much time it will go on like this before we got a wipeout of the people and their debt, and the people getting poorer and poorer and poorer, and even more. They can repay their debt. The taxes will raise again. There is all is correlated, and at the end, all we make the expenses of it. So I'm not seeing anything of this getting better actually. And as you see, federal government tax receipts are every year's 2 let's just make a pair here. Is $3 trillion of taxes just in America, in the U.S. From the Bureau of Economic Analysis, at least. $3 trillion of taxes. 24% of that is going. It is actually going into repaying the debt, just to have the debt, not to repay the debt itself, but just to have the debt. And if you want to repay it, you should take like another 10%, 10-50%. Let's make 40% of your taxes going into the debt to be repaid, if you want the debt to be repaid, at least in the long run. But how much can you afford to get from your average citizens? How much before they have to struggle, and they can't afford to buy food and shelter and house. It's just something that we cannot. We are just saying this is the public debt taxes less the taxes in billions. So you see, if you take the taxes out, we get to a point where we have 27 trillion of public debt, and the taxes are just a little tiny amount of the public debt. So I don't really know how they can afford to repay the debt. I don't think they will. They will never. They probably just arrives at the point where they say, well, we can afford to repay this debt, we go in default, we make a new money, maybe a CBDC or something like that, or they are planning to do so anyway, because it's the only way they can actually force a CBDC into the people, because CBDC is an instrument of control. They can take your money without your consent. They can manage the circulating supply. They can make another CBDC for the rich and for the companies and governments, and a CBDC for the poorer, the average citizens, with different supply mechanics and all of that. The only things that they're waiting for is to have quantum resistance and all of that stuff, because obviously a hacking of that system will be just will destroy the system itself. And I think that is the only way they can get out. But until then, we are in this system, and the system is raising rates and selling their assets or make it expire and all of that, and we are actually in that zone. So what I think the Fed will do, and will obviously wait on the DXY, they're going to increase these rates until we have the CPI getting down, the PCE getting down, and all of these indicators getting down, of inflation indicators, to a point where it's manageable, 2-3%, 4%, and they will just maybe also 5%, but with a momentum to the downside, and they'll stop and just wait there for like some month. They will not touch the interest rate. We'll have 3.5-4%, so 400 BPS at the very least at the end of the year, in the worst case, and there they will just stop and wait if the inflation will go down. And so it will be, I'm saying this because it will be a long way until we have the macro environment, micro opportunity to shift in this environment that will lead the price of risk on asset like Bitcoin, like the stock market, to go up. Meanwhile, the dollar will weaken themselves, and they will start printing again. So I'm not saying that much of a bull case right now, still in the bearish for the short term and bullish in the long term. So this and more I can talk about with you Also with on ChainLog. If you have any question, you can buy my subscription plan there, and we can talk every day of whatever you want to talk. I can try and make you know things. I have this ChainLog courses and everything. So if you want, I'm there, and you can get me on Twitter, on every other platform. The links are below into description. And this is most likely what I'm talking about here today, and we'll see in the next 2 weeks if anything goes, whatever it goes, and we'll make a recap of what's going on. So for today, I think I will close the live here. I'm just waiting if there are some questions or not. Okay, actually not. That's okay. So I will close here the live, and we'll see you next time. If you have any question, you know where to find me. Links into description. Cheers.